Hey traders, Akil Stokes here, Forex trader, trading coach, and co-founder of Tier1Trading.com, and welcome back to another video. In today's video, I want to share a walkthrough of a trade that we took in today's live room session. And of course, if you're a frequent viewer of this channel, you know we're not just going to talk about the technicals and show you the trade, but we're going to throw some lessons in there as well. And today's lesson talks about risk reward, talks about active trade management, and also talks about trade evaluation. So make sure you watch it in full. Now, before we get started, do me a big favor. If you guys are new to this channel, make sure you do three things for me. One, hit that subscribe button. Make sure the notification bell is hit. That way, the next time I do a live premiere video, you are notified and you can join us live. It's always great having the chat box to the right rolling with members and conversations as we do these videos live. Also, make sure you share, right? Share this on social media, whether it's Instagram, share a story of it, whether it's Twitter, Facebook, whatever it may be. It's a big favor to myself if you share it. And lastly, hit that like button. It takes a second to do. It helps the site tremendously. And it's really all I ask of you guys. So I hope you guys enjoyed today's video. It's a walkthrough of a trade that we took on the pound dollar. And I'll see you guys at the very end. Pound dollar, again, I mentioned yesterday was an interesting day for the pound. We saw some big spikes in one direction at the optimism of Theresa May's magic plan, and then reality struck again, and apparently the magic plan was nothing different, and we saw some spikes up, and now we're back to normal business on the pound pair. So pound dollar here on the daily, here's what we're doing right now, right? This was the previous level of structure we were looking at, about, what is that, 126.65s. We are currently trading below it. Now, again, bigger picture, daily close is what's going to matter most. But as a day trader, you know, we got to take our shots when we see them. So the first thing I want to ask myself after I see what price action is currently doing is there room to move lower? What would you guys say? Can we move lower, or are we at the bottom? Do it in my head. Anyway, yeah, we could go lower to $1.26. So there's room here, right? We're at 126.50s right now. There is room here as a day trader to get involved, right? So let's start working our way down to the 4 hour. Now, is this anyone's first week here in the live room? Maybe you were here yesterday, second day. If so, are you starting to adjust already, right? Do you see that my process is essentially the exact same thing every single day? Daily, 4 hour, 60, right? IPDE, right? Very mechanical in what I do. Very mechanical. I believe in a very simple formula, right? Consistent analysis plus consistent execution equals consistent results. So if I'm consistent in how I analyze the market, how I go through it, what I look for, all that fun stuff, and I'm consistent in how I execute my trades, meaning I take what I'm supposed to take. I don't skip trades or miss trades or take trades I'm not supposed to be in. Then my results will be consistent as well. And as long as I've done my job with back testing and ensuring that what I'm trading actually has a positive expectancy, because you'd be surprised that some people are very consistent in their analysis, very consistent in their execution, but they're trading something that actually doesn't work. I know it sounds weird, but it's actually true. And they have consistent results. Those consistent results are just negative because what they're doing doesn't actually work. But I believe if I do those two things, my results will be consistent as well. And that's how I've been able to be a consistently profitable trader over the last many years. So yeah, hopefully you're catching on. But yeah, I've run into people where it's like they're great technicians, but what they're trading just doesn't work. And it's like, I don't know. I don't even know what to say to them. You're wasting this talent. You're wasting this talent of yours. But everyone's different. Then you have people that trade something that works perfectly, or have a strategy that works perfectly, but they can't execute it live because psychological issues sabotage themselves. So you get people on both sides. Got to find that nice mix in the middle. But not much under 4 hours. So let's dig right down to the 60-minute here on the pound dollar. Again, you can see some of the madness from yesterday, the spike ups, the retracements. It gave us a nice little ebb and flow. Gave us a nice little structure shelf as well. Two levels. We have a low right here, which we kind of came back up and tested. We'll see this on a lower time frame. And then we also have a nice little level right here we can look for. So there are some levels in the market where if we get that pullback, we can look to take advantage of a trade. So again, I'm looking for shorts here. The concern is that we haven't broken that level in the daily, so we don't know for sure yet. But if we get an opportunity, we can certainly take advantage of it. And there's two things I can see here. One, we pull back in the structure. We continue extending down. I think the overall bias for the pound is bearish already. So you're just even from a fundamental standpoint, I should say. So if you're on the bearish side, you're on the right side. But if for some reason we're going to start to see a reversal, again, this can be a head and shoulders pattern that forms with a break and close above that. So if you're someone that's looking to get long, maybe play the reversal. That's something to look for as well. You can see that first level of structure, that shelf looks a lot clearer here, right? A lot smoother here on the 5 minute, a nice range between 126.61s and 126.80s. And then if we go down to my favorite time frame, the range bar charts, our favorite chart, the range bar charts, again, it just gives us a nice little condensed version of that move. So if you're looking for longs here, shorts on the pound dollar, wait for a pullback trade, right? 126.60s looks to be a key level, and we should be able to stay below 126.80s. So this ends up being the chopping zone, the kill zone, right? Now we see that market is coming off of a what type of move here? Yeah, I like the RSI swap. We'll see if we can get back up into that area. Again, this is not your best trend continuation opportunity because we haven't technically violated that level on the higher time frames. But there is room to the downside, so it's definitely one that's worth your shot. And if we take a look at this from a risk-reward perspective, right? Again, I don't know where we're going to get involved, so let's just say right in the middle of this zone, right? We know that stop should be above where? Where? Above structure, right? And again, this is going fast, guys. Don't worry. I don't want you guys getting information overload. Just keep coming in each and every day, and I've got a few traders mentioned this earlier. You'll get adjusted really quickly, or you'll adapt really quickly to the live room. But yeah, let's just say we're putting stops up here. 126.83, 93. Let's even say you want to be above the 127 even handle, just because you want it to be really safe, right? What level did we talk about on the higher time frame, right? Remember that higher time frame prediction, which maybe seemed pointless at the time, but now is going to prove to be very important. Where do we talk about price action going to? Who remembers the number? Yeah, 126 even. So you set yourself up in a situation like this. You want to be a little bit above it, obviously. You set yourself up where you're a little bit like this, and we can even make it even more extreme risk reward. That's probably too much of a reach. But you still have room to increase your risk and still be safe. But the point is, you put yourself in a situation where you have a risk reward that now looks like this. And again, you don't have to be this aggressive, obviously. You can take chunks off on the way down. But 83, 93 is going to be more realistic. You put yourself in this situation and you ask yourself, how many times do I have to be right versus being wrong? And hopefully it takes some of the fear away, because we don't want to fear being wrong. Many of us make mistakes because we fear being wrong, right? If we know in this situation that I can lose 2.5 times, I can lose 2.5 times and only need to win once to cover it, that should actually give us confidence, should it not? Especially if you know your win rate. Right? Here's a good example, right? So I know my win rate. Right? I know my win rate. I am typically a 55% trader. But let's say, let's even take the lowest that I go, which is about 40%. Hope I didn't jinx myself. The lowest I go is about 40% typically when things are going bad. So if I know at my worst I'm a 40% trader, right? That means I'm going to win 4 out of every 10 trades, right? So take this risk reward and measure out what 6 losses look like. 1, 2, 3, 4, 5, 6, right? Measure out 6 losses and ask yourself, would 4 wins cover for that? 1, 2, we don't need to go on any further. So if you're consistently taking opportunities like this, you know that even at your worst, guess what? Should you still be profitable? Of course, yes. Yes. Now again, is this risk reward going to be the same for everyone? No. Right? This is based on a true trend following type of strategy. Many of you guys are going to be taking stops or taking targets in between different places like that. But obviously you just do the same type of deal per how you're trading. But you got to have confidence. Once you, and a lot of it won't come until you know yourself, until you're very comfortable in your trading skin and you know what you can do. But once you have that confidence to just take the trade, and once you can put yourself in a situation where you really have the risk reward in your favor and you no longer fear losing, it opens up a massive amount of freedom. A massive amount of freedom. It's no different than a professional athlete that's playing loose versus playing tight, right? We see this we're just talking about the NBA playoffs, right? NBA playoffs, they always say that a lot of the bench players play better at home versus on the road. On the road, they're a little bit more nervous. Maybe it's their first time in the playoffs. They're younger guys, and they start overthinking. They get tight, and they start missing all their shots and making turnovers and doing all the bad stuff they're not supposed to do. At home, it's a little bit more comfortable. You know, you're here the majority of the year. The fans are not booing you. They're cheering you. You play a little looser, and you typically perform better because of that confidence. So you just want to trade free. Trade free. All right. Any questions on the cable, the pound dollar? There we go. Just got short pound dollar. If you guys remember, we're looking for a trend continuation trade on this pair. Looking for a complex pullback. We're also looking for a bat pattern. Hey, George. Now, the bat pattern never filled, right? The bat pattern was up at 126.73 where I had my aggressive orders on. However, we did get a lower low, lower close off the complex pullback, right? So again, here's that complex pullback. Basically an AB equals CD pattern. And I just added another chart to my chart. How do I get rid of that? Data series. Let's get rid of you. And there we go. Here's your complex pullback. Again, copy and paste, AB equals CD move. You guys want some Fibonacci confluence. We're going to have a fib up there as well. And we got our lower low, lower close. So entered at market after the lower low, lower close, looking to get short, or am short. Again, we're looking down towards that 126 level. If you're looking for a more conservative target area for, say, an initial target, there's some Fibonacci. You can't see it because I got to change these colors on the gray chart. But there's a 127 extension down at 126.31. There's a 1618 down at 126.20s as well. So you can keep those two levels in mind. So second trade of the week for me, and we'll see how it goes. Real quick with the pound dollar, we get a break and close below this level right here, I'm going to be able to reduce those stops, right? So stop losses are up here, right? We get a break and close below here. I'd really love to see a break and close below this level, which it may be the same candle. Here's a cool trick on the range bar charts, guys. If we go lower, I know exactly where this candle's going to close at. How is that? How do I know exactly where this candle's going to close at? Yeah, because it has to be a range of 5, yeah. So it would be right at that level. But what I can do is if we get a break and close below that level, that's going to allow me to reduce my risk, right? Right now my risk is 126.60 to 126.90. So basically 30 pips of risk, right? If you guys remember the example we did earlier, so this will kind of fit right into it, right? I will be able to reduce this to about 126.67. So where I had 30 pips of potential risk before, didn't want to do that, I will have 7 pips of potential risk. Not bad, right? Now again, pros and cons of actively managing your stops, right? You considerably reduce the breathing room that your trade has. But you can reduce that risk as the market's going down and then save your bacon on the back end. And eventually what that does is this. You start off with a risk reward that looks like this, right? We talked about, was it a 2.5 to 1, something like that? And that risk reward, oh, no, stay there. That risk becomes this. And you don't need to hit on all of these. As you guys can see, you don't need to hit on all of these. You just need to hit on a few. And this is the same concept. I haven't done any this year. This is the same concept with the home run trades. If you guys are new, you haven't heard me talk about it because I haven't had any this year. But typically my trading style goes like this, right? I showed you guys my equity curve in Monday's session, right? Right? You guys would agree, right? This is what my equity curve typically looks like, right? It's slow, it's steady, it's boring, right? And then about 3 times a year, I get a home run trade. And what do you think that home run trade does to my equity curve? Boom! And then what do we do after that? We go right back into the boring. And then again, at some point again, boom! Right? And we go back to it. That's typically how my equity curve looks. Now again, this year I haven't had that, right? That's one of the reasons I'm performing lower than I'm used to. And it's also, again, the volatility in the market or lack thereof. But this is the same concept with the home run trades where you go for it. You get that big win. It doesn't happen all the time, right? I said I hit on about 3 of them a year. I'll probably take maybe 6 to 10, maybe 10, maybe a reach, maybe 6 to 10 a year. So a lot of them you don't hit on. And when I say hit, I mean the big target. A lot of them end up where it's like, some of them are stopped out right away because you just lose, trades lose. Others, you hit like an initial target. You hit an initial target, and then guess what never gets hit? Again, if you're looking at minor levels here, 127 extension, this is your first minor level. 168, this is your second minor level. So keep an eye on those levels if you guys are in the trade. Yeah, but a lot of times it goes down, it hits your first target, and never gets your second one. So you get a good trade out of it, but you don't get that home run. So we'll see, but good signs here on pound dollar. I'll continue to manage this as the day goes on. But this was a pretty cool trade. It was good. Do you ever consider splitting your trades? Yes, I do. Not on this particular case, but I typically split them up into 2 targets. Yep, a target 1 and a target 2. Not in this particular case though. But 99% of my trades are target 1s, target 2s, unless it's a scenario where I make a major adjustment to my trading plan, which has happened before. 2014 was the last time I did that, where the back half of 2014, I stopped taking target 2s and only took target 1s. But yeah, typically split them into two positions. I'll take half off at a very conservative target, move stops to break even, reduce all my risk, and look to get the second half off at an extended level. Yep. All right, gang, just finished uploading the live room recording to the website, and want to come back and update you guys on the trade. You can see that we did get an initial move down. We came a little bit past that 127.2 Fibonacci extension down to 126.25, but we didn't quite get to that 126 even handle or right above, which is the level that I was shooting for. Price then retraced and ended up stopping me out. So a losing trade for today, but if you guys remember the session earlier, I was able to reduce my risk. So instead of taking a full 30 pip loss on this trade, I was able to get out for -7, -8, something like that. And again, risk management, trade management is key. Now, obviously in hindsight, you would say, Akil, why didn't you go for the more conservative target? That would have been a winner. Something that is important to remember is that the hindsight trader is always right. And there's a massive difference between doing hindsight analysis, we call it reviewing the tape, and seeing what you could have done better. Could I have gotten involved at a better entry? Could I have placed stops differently, right? Things that are based off the technicals that are going to help your trading down the line. I think that's a great practice that every trader should be doing. But you want to make sure you're doing that and not just building in an excuse. You don't want to be what I call the woulda, coulda, shoulda trader, where you're like, well, I woulda, coulda, shoulda taken it out right here and it would have been a winner. At the end of the day, it's important to trust your analysis. And if you go back, if you review the trade, and if you see that you would have done the exact same thing the same way, then it goes down as a good trade. And we can't base our, our feelings off of the result because, well, ask yourself this question. If this trade would have went down and smashed through the 126 level, would you be saying the same thing? Would you still be saying I would have taken my targets out at this higher level? If so, then yes, you did the right thing by taking targets out there. If not, then you're judging yourself based on the result. And we see this in many examples. We see traders all the time where a trade hits their targets and then it goes on to rally 100 more pips. You're like, oh man, I knew I should have put my target profit 100 pips lower. No, you shouldn't have. You put them at the exact place they were supposed to be. And again, just because the market went past it doesn't mean that you did anything wrong. So tap yourself on the back, good trade. I'm going to review this, but as far as I can remember right now, I don't think I did anything wrong. We'll see when we do the review. But I'm happy with this trade. It didn't get a winner, but my prediction was right, at least in partial. And I didn't take much of a loss shooting for that prediction. So I hope you guys enjoyed that video. Obviously, the trading opportunity didn't work out in my favor, but you know what? That's trading. Sometimes you win, sometimes you lose, despite what the internet may tell you. What I wanted you to get out of this video was value, not just from a technical perspective of how we broke down the markets, how we went about entering the trades and picking targets and all that fun stuff, but also looking at the importance of position sizing, the importance of risk management, trade management, the importance of trade evaluation. It's very important that you understand that all systems lose, right? Even if you are a 90% trader, right? 10% of the time you're going to lose. And if you can't deal with that emotionally and psychologically, you're going to sabotage yourself. And it's going to be very, very, very hard to be a consistently profitable trader when you're tripping yourself up most of the time. So I hope that's the point that went across. Now, if you guys are new, I will be doing another video this weekend sharing with you a trading opportunity that's on my radar. For you guys watching the YouTube version, I'll try to pick out the best educational pair for you guys that are tier 1 members, whether it's a premium member or a trial member. You'll get the full watch list. There's a massively good reaction last week from the big video, so I think we're going to stick with that format and just go through the entire slate of pairs and prepare you for the week ahead. By the way, if you haven't done so already, guys, make sure you head over to our website, www.tier1trading.com. There's a whole bunch of free training you can get there. Just go on the site. There's a button that says click here for free training, whatever like that. Go there and indulge yourself. We've done a lot of great workshops in the past. Take advantage of them, please. Lastly, if you haven't done so already, make sure you subscribe. If you're new, hit that notification bell so you're notified in case we do a live premiere. Share this video on social media, and once again, please take a second out of your day to hit that like button before you head out. If you can do that for me, I will be much appreciative. And until next time, plan your trade, trade your plan. You guys have a great day, and I'll see you in the weekend.